US CPI will be released at 8:30 a.m. ET this morning, and in preparation of that, we are seeing some ups and down price activity in some of the major currency pairs. The euro versus US dollar is up and down. The sterling versus US dollar is up and down. The dollar versus yen, that's moving a little bit lower. Let's go through the technicals that we're going to be looking through this number, and I'll explain why and why levels are important and what to potentially look for. So let's get started. The headline CPI is expected to come in at 0.3%, while the core measure is expected to come to 0.2%. For the year-on-year levels, it's 2.9% for the headline, up from 2.7% last month. The core is expected to remain unchanged at 3.3%. Those are still high numbers that will keep the Fed on the sidelines. The economy is just too strong. So let's take a look at the technicals that are driving this market. I'm going to start with the euro versus US dollar. And we've seen a rebound in the euro versus US dollar over the last few days of trading, at least from the bottom that we saw on Monday's trade. This was the lowest level for the euro versus US dollar, going back to all the way back to this level right here, which is November of 2022. So multi-year lows here for the euro versus US dollar. That moved to the downside, was quickly saw a quick rebound on Monday's trade. Actually, we did close higher on Tuesday. We closed higher as well, moving up to test the 200-hour moving average. And since then, the prices waffled back and forth. That's not unusual ahead of a key economic release. Why? Because this is a barometer for either bullish above or bearish below, and the market will hang around that level until we get the number. If the number is a little bit more dovish, then we see the dollar move lower. We see the euro versus US dollar move higher. If the prices or the number is more hawkish, then we could expect that the dollar should move to the upside, the euro move lower, the dollar move higher in that respect. So I've outlined some technical levels here that up on the top side that we be paying attention to. And one is this, or the first one really is this swing area right through here. This swing area was defined by a number of different swing lows and swing highs going back in time. Over here it was a floor, then it became a ceiling, then it became a floor again, and now it's a ceiling. So that area comes between 1.0332 and 1.0343. I'll just extend this out over here to make it easier to see. Just above that is a 38.2% retracement. That's of this move down from the high price that we saw in the month of December to the low price that we saw in the month of January. Getting above the 38.2% retracement is always a minimum target for buyers to off of a downward move to show that they are taking back more control. So this area right through here between 1.0332 and 1.0349 is going to be a key target on the top side. That would come off a weaker than expected number. On the downside, if we do start to move down because of a stronger CPI data, the 100-hour moving average that held resistance here and here in trading yesterday before breaking to the upside here and seeing momentum. That what was once resistance now becomes support. So if we move down, we're going to test that 100-hour moving average 1.02669. Break below that level opens the door for a moves back down toward our low prices that we saw in trading over the last few weeks of trading, including the low price that we saw on Monday at 1.0176. Again, that was the lowest level in more than 2 years for this currency pair. So be aware of that. So this is a key level. This is a key level. Up here is our key levels. We'll see which way it goes off of the data. Let's take a look at the dollar versus yen next. And this currency pair, as I mentioned, has broken to the downside in trading here today. What we've seen over time in this pair over the last few weeks is just a lot of ups and downs. We did try to move to the upside after the U.S. jobs report on Friday, which came in stronger than expected, but quickly rotated back to the downside. That rotation to the downside took the pair back near the this cluster of moving averages right through here, the 100 bar moving average on the 4-hour chart, the 100 and 200-hour moving averages, which are now converged. And unlike the euro versus US dollar, sort of where the price traded above and below the moving average today in anticipation of the CPI data, the dollar versus yen is making a break to the downside here. So it is sort of looking toward maybe perhaps a more a weaker number and a lower dollar overall. That or either we're overbought through here, or the market's tired. We've seen the price trade in this range for quite a long time after this trend move to the upside. And it's just the technical breaks of the 100 and 200 hour moving average and the 100 bar moving average on the 4-hour chart was just too much for the buyers to continue to hold. Recall from this week, we've seen moves below that 100 bar moving average on the 4-hour chart, but each of the time the market failed. In trading yesterday, the market started to use that level as support. So breaking below that level was probably a disappointment for those buyers, and we started to see rotation to the downside here. Now, what keeps me sanguine, I guess, is that the price remains within this red box right here, and that's ultimately where the market has to either break that to the downside or break to the upside and get out of this quagmire, this quicksand that's just holding the pair in play right through here. In between comes those moving averages, and that's going to be a barometer still. If we move above it, it's more bullish. If we stay below it, then we're going to head down toward this swing area down at the bottom. I'm going to put or the low of the red box, I'm going to put a swing area right through here where we had different swing lows and swing highs coming, or actually swing lows coming through here. That's going to be the next target on the downside. On the top side, if we get back above the cluster of moving averages, we'll look toward these highs right through here, including the extreme high that we saw on Friday's trade as our next key targets. But ups and downs in the dollar versus yen over the last 4 or so trading weeks. We'll use cluster moving averages in the middle as a barometer for more bullish or more bearish in trading here today, and then use the extremes as targets. Finally, let's take a look at the sterling versus US dollar. And this pair certainly has been under more pressure than some of the other currency pairs over the last week or so of trading. In trading on Tuesday, the price came down to, or Monday, the price came down to a low right near the 121 level. Where does that stand in looking back in time? And you have to go back to this point right here, which is November of 2023. So over a year ago for the sterling versus US dollar, then we rebounded to the upside, came up to this level, this swing low level from last week's trading at 1.2338, and initially found resistance sellers, found sellers, and again in trading here today we found sellers against that level again. So getting above both the 100-hour moving average and this high right here at 1.22383 would be more bullish for this pair, and have traders looking. I just put the Fibonacci retracement from this point right here to give it an easy target to get to. 2.22808 would be the first target on the top side. Then we'd start to look toward the 50% retracement and the 200-hour moving average, which are at the same levels at 1.2337. Those are going to be the levels that we need to get to and through to increase the bullish bias for the sterling versus US dollar. On the downside, if we can't, if the CPI is more dovish, then it's a look back down toward our lows and back down toward the low price that we saw in Monday's trade at 1.208989. Again, that's the lowest level going back to November of 2023. If we break below that level, then we have this swing area off the daily chart, which comes between 1.2038 and 1.20686. That level corresponds with these lows through here over around a month's time period, where the market bottomed and then bottomed before moving to the upside. So be aware of that area on the downside as well for the sterling versus US dollar. So there you have it. Look at the 3 major currency pairs as we await the CPI data. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.